When it comes to gifts or inheritances, there are various reliefs and exemptions in order to allow a person, a recipient, a beneficiary, a donee to reduce their tax situation. One of the reliefs, a very significant relief, is agricultural relief, and I've done a video on my YouTube channel about agricultural relief. Another very significant relief, and it's kind of similar to agricultural, is business relief. So business relief, if you inherit or receive a gift of business property, you may qualify for business relief. And this is granted on the transfer of a business, a share in a business, or the shares or securities of a company carrying on a business. The relief does not apply, however, to individual assets, even if those assets were used in the business. The business relief reduces taxable value of the business property for capital acquisitions tax purposes by 90%. This is subject to conditions. So this is similar to the agricultural relief, where if you got a farm, for example, or a business worth €1 million and it qualifies for the relief, then you can actually reduce the value for tax purposes, for capital acquisitions tax purposes, that's inheritance tax and gift tax. You can reduce the value by 90% to 10%. So the farm or the business now, which we're discussing in this, would be reduced to 10%. So if it was worth €1 million in the first instance, then it's now only worth €100,000. What are the conditions to qualify for business relief if you receive a gift or an inheritance? It's where a business qualifies as relevant business property and the business has been carried on for the purpose of a gain for a certain minimum period of time before the date of the gift or inheritance, and you as the beneficiary or donee retain ownership of the property for a minimum period of time after the date of the gift or the inheritance. So what are those conditions in terms of the time periods, and what is relevant business property? Relevant business property would involve a business of a sole trader, such as a pub or a shop, an interest in a business such as a sole trader going into partnership or a retiring partner transferring their share, land, buildings, plant or machinery used in a business carried on by a company or a partnership, unquoted shares or securities of a company where on the valuation date and after taking the gift or inheritance the person receiving it owns over 25% of the voting rights, controls the company, or owns at least 10% or more of the combined value of all issued shares and securities. So business relief, I'll say it again, is not available on the transfer of individual assets, but it is available on the transfer of a business, and relevant business property is key here. Businesses which do not qualify for relief would include business which are mainly involved in currencies, securities, stocks or shares, land or buildings, making or holding investments. How do you calculate the relief amount? The taxable value of the relevant business property is reduced by 90%, so down to 10%. So you calculate the taxable value by deducting from the market value of the relevant business property liabilities, costs, expenses, any consideration, in other words, any money paid for it, and that gives you the taxable value or the gross taxable value, and then you apply 10% to that. Certain assets known as accepted assets are not included in the 90% reduction when calculating the taxable value. These would include assets which are not being used for the purpose of the business, assets purchased more than 2 years before the gift or inheritance and not used wholly or mainly for the purpose of the business, and any new business bought by a company within the minimum ownership period. The minimum ownership period then, the person making the gift or inheritance must have owned the relevant business property for a continuous period of at least, in the case of an inheritance, 2 years immediately prior to the date of the inheritance, or in any other case, 5 years immediately prior to the date of the gift or inheritance. The minimum ownership can be partially met if the property was owned by either the person's spouse or civil partner or a trustee. This business relief can be withdrawn So relief on relevant business property can be fully or partially withdrawn in certain situations. For example, after January 2024, Revenue will withdraw the relief where the relevant business property ceases to trade within 6 years of the valuation date of the gift or inheritance, or is disposed of in whole or in part within 6 years of the valuation date, or comprises development land and the disposal is within 10 years of the valuation date. The key thing is that the donee or beneficiary must hold the business for at least 6 years after the gift or benefit. That is an overview of business relief. It's in relation to capital acquisitions tax. Capital acquisitions tax, remember, covers inheritance tax and gift tax, and business relief is one of the many reliefs that are available for capital acquisitions tax. It's a significant one because, as I say, essentially the value of the business for tax purposes is reduced to 10%. And that's a similar relief to agricultural relief, which again, you reduce the value of the farm or agricultural land by 90% to 10%. I hope you find this video useful. If you do, I'd appreciate if you gave it the thumbs up down below. Thank you very much.